Hi everyone. Are global market shifts and the future of the US dollar weighing on your mind? You've worked hard for your wealth, and concerns about economic uncertainty are completely understandable. Many of our viewers, just like you, are looking for true peace of mind and lasting security. That's why tangible assets like physical gold and silver are becoming a crucial choice for wealth protection and legacy preservation. If you're thinking about how gold and silver could help safeguard your retirement, we invite you to take the next step. At ITM Trading, trusted for almost 30 years, we're here to provide clear, honest information. So take advantage of our free, no obligation consultation with one of our experienced analysts. It's a friendly conversation to explore your options, answer questions, and see if precious metals fits your goals. Call us or visit DannyReport.com to schedule your time. Todd Bubba Horwitz is back with us today. He says, nobody can time the market, but the next lows will take out the previous lows in the NASDAQ, the S&P, and the Dow, always bringing us great news. He's back with us today. Bubba, so good to see you.
Danny, it's always great to be with you and great to see you. It's great to be a part of the show.
Thank you so much. Despite everything going on in the world, Bubba, we want to get your thoughts on how you see things. Still thinking a major stock market, should I say correction or crash on the horizon?
I still see that, Danny. Let's look at it from a real perspective. Right now, we have a big lack of participation in markets. Only 4 or 5% of the people in the population are trading these markets right now. Volume is at about 50% of normal, which has been low over the last couple of years anyways. There's a lot of people that are giving up their 401ks because they can't afford to, even know they're making a mistake because they're giving up the 4% raise that they get. But you don't have the participation of the markets. You don't have the action in the markets. So certainly, yes, we're still drifting higher, and markets, dull markets drift higher. And that is the thing we have to always remember, is that there is still money flowing in. And based on history, the markets go up 8.5% year over year. But I could see this market melting down. You have a lot of issues out there. I think we're in a recession. Again, the upper class, no, they're not in a recession, but the middle to lower are certainly struggling. Jobs, gas, food, inflation, a lot of issues out there. And eventually they're going to come to have to pay the debt.
Hey, you said middle. What middle? There's not even a middle class anymore, Bubba.
I was trying to make you feel better. There really is not. We have some big problems. And I think there's an interesting stat that I was looking at, and I always like to refer to 1985. In 1985, the average income was $25,000, an average house was $80,000, so it's 3.5 times. Now the average income is $70,000, the average house is $500,000, so it's a little over 7 times. That shows you what damage has been done by our government and by our Federal Reserve and by all the rest of the group that handles the money for us.
Talking about the damage from the Federal Reserve, obviously we're speaking here, outlook for the summer series. Does the Fed cave to Trump's pressures eventually?
I don't think so. I don't think they can. I think if they do, they'll be making a dramatic mistake. Again, we still have hot inflation, and it's only getting worse, just like what's going on in gold. You have a lot of issues here, and I think that Powell is basically giving the finger to Trump because he does have the control, and Trump can beg and whine all he wants that he wants a cut. But I think a cut is a mistake. The interest rate markets are telling you that there is no time or no need for a cut. Certainly, when you look at the actual last cut, which is almost a year ago, starting in September, the Fed rate went down 100 basis points. In that same period of time, the 10-year notes have gone up 100 basis points. So the only person or people who benefited from this is the banks. The individuals have not benefited that, and nor do they have to. The banks are the benefactor of a Fed rate cut. And if they cut rates, it's a horrific mistake, because true interest rates throughout the markets, if you look at some of the peer-to-peer lenders, Prosper, Cabbage, those guys, they're getting 15, 16%. Of course, credit card interest rates are in the 20s. So we're already low enough as it is. Mortgage rates are at 7%. I think there's some issues in the housing business because lenders, borrowers, and builders are making deals for housing mortgage rates, which means they're willing to take a chance because they can't sell the inventory that they have.
As we're speaking, I mean, Trump, I see the headlines calling Powell stupid that he's not going to give him the rate cuts, and he's called him too late, Powell. I mean, do you think there's any issue with this relationship not being the rosiest.
Well, I think that, look, if you really look at what the Fed's mandate truly is, it's jobs and it's security and it's price stability. And adjusting rates, trying to play with rates was a Greenspan thing going back to the 80s. And it's not right. That what you really need to do is you want a true system. You have to let the free markets determine what rates are. And rates are higher than we are getting because that's what people are willing to pay. And you can't try to manipulate rates to juice an economy, which really doesn't, because what you're doing is you're benefiting the upper 5% of the population. Because let's face it, when you go borrow, somebody who's working, an average worker on the street making $60,000 a year, he or she is not getting a bargain on the rate. She's going to pay full top dollar for that interest rate versus if somebody who's got money goes to the bank, they're going to get a better rate. And of course, I think that's the difference, because the average American cannot benefit from lower rates because they don't have the capital or the money to support the loan anyways.
Talk to me about gold prices, banks, super uber bullish and liking gold these days, Bubba. Talk of $4,000 gold. What say you?
Well, I think gold's got, listen, we last talked, I said I thought we'd get to 3,500, which we did. I think it can go higher. But Citibank, now again, you have to always be very careful when these big players come out and make some ridiculous statement, and they're calling for a 25% haircut in gold from around these levels. To me, that's probably them saying we need people to sell so we can buy and participate in this. I think gold's going higher, but I think at this point we are a little bit overbought. There has been a little bit too much here, and I think you should expect a pullback. I would not be surprised to see 3,100, 3,000, somewhere around there. But overall, I think if you're a buyer and you're buying physical metals, not paper, because I don't think there's enough gold in the world to cover the amount of paper out there. But if you're buying, buy with money that you have, because it will be, and it will trade at 5,000 at some point. It will trade higher at some point because, of course, we talk about inflation. When I first started trading, the Dow Jones Industrials was 800. Now it's 40,000. So it'll grow. And it will help fight against inflation, which you can see is not going away. No matter what the numbers show, it just shows that we're growing. Prices are going up at a slower pace, but they're still going higher.
You absolutely want to own the physical people. That's part of our education here at ITM Trading. I invite everyone to schedule a Calendly in our description to learn more about why you want physical, not the paper gold, as Bubba says.
No.
Thoughts on silver, Bubba? For all the silver bugs watching, what do you see in the cards for silver?
I love silver, and as we talked about, I thought mid-30s. Well, we're past the mid-30s now. I think there's an outside chance we get to 45 this year. It could go higher. You could get a squeeze here pretty soon. The gold-silver ratio had really expanded, and suddenly we've seen gold struggle a little bit and silver start to go higher. I would expect to see silver over in the 40 range by the end of the third quarter here, if not higher. I think silver looks great. I think it's a great opportunity. I think the other one we don't talk about often, but is platinum, because platinum it can move now as well. And if you remember, at one time platinum was double gold. Now it's a third of. So I would think it's a pretty good value down here.
Todd, Bubba, Horwitz, how do you plan to spend your summer?
Playing golf, sitting by the pool, hanging with my dogs. And my wife, of course.
I'm glad you added that, or you'd be in the doghouse.
That's exactly right. That's where I spend most of my time.
You're the best, Bubba. Well, we will see you soon. Thank you so much for stopping by and checking in with us.
Thanks, Danny. Have a great day.
And thanks for watching. We'll have more great content coming your way. Be sure to subscribe to our channel, and we will see you real soon.